Okay, folks, welcome to Market Trends. I'm David Russell, VP of Market Intelligence at TradeStation. Great to be with everyone. As usual, if you go to TradeStation.com, you go to Research, Insights, you'll find the Market Trends, the Market Insights blog, and on that blog, you'll find a blog post that has the Wall Street sign on it. And if you go to that, it will be the rundown for the show that we are, or the webinar we're doing today. The main points we're going to be covering. These are just the disclosures I'm going through. Great to see everyone. So we got a bearish cross on our kind of proprietary breadth-based crossover on the S&P 500. The number of companies above the 20-day moving average versus the companies above the 50-day. It's not, the one thing I'll say is it doesn't always work to the downside. It has, I've back tested it and I found that it works to the upside, but not to the downside. So it doesn't necessarily mean that the market's going to go down, but it does mean that in some ways the risk reward is maybe not quite as favorable. So if you're on TradeStation.com and you go to Insights, Research Insights, really quickly here, we do a weekly S&P 500. There is an interesting thing that I think we want to watch, which is drawing Fibonacci price retracement lines. If we look at this candle last week, basically this low up to this high, right? We're pretty much trying to hold. I'm going to go to an hourly and you can see we're pretty much trying to kind of hold the middle of that 50% retracement of that candle, which is for people who are more kind of on the bullish side, that's a signal that things are not coming unglued yet. So I wanted to just kind of point that out. Now, we had actually identified 4,400 here as a level, and there were a couple of reasons. One is if you actually look here, this was there was a weekly level here as well. This was the beginning of a week, the week that started June 20th. You can see we came down, and this was that kind of small bearish inside week. This is hourly, but basically that was the week. Then we went down. We had a false breakdown, and we came soaring back, and now we've retraced half that move. We've looked at a lot of the 50% retracements on the S&P, and it's been a pretty interesting kind of signal. And it's kind of telling us here that the uptrend is not broken, really. I also look at the 10-day simple moving average. I think I'm more or less, as I said, I don't know a lot of other people who use that, but I have found it useful. And it is on one of these charts here. I think it's on MT. I can't remember which chart I have it on here, but it's on this one here. And if we look at this, basically you can see this a yellow line on this chart. We're basically holding it exactly today. So to me, that's also a sign that the short-term uptrend is not destroyed. We were outside of the Keltner channel, and all we did was come back down and pretty much just hold it. So that's just kind of interesting with today's price action. The other question I'll just ask is, does the market sell off before earnings season, or how does it work out in terms of timing? So I from my perspective, when you have all these earnings and everything coming, just thinking of the normal timeline, I would almost lean more to the fact that people might be leaning on the bull side, and we get through earnings, and then we get to the Fed, and I think that it could be more of a sell the news, to kind of keep running until we have all the news. That could be more of what we're seeing. So at this point, there's not a lot technically. I mean, the this signal that we have here, it's on our breadth chart that we share with you guys. We use this one a lot. This blue line went under the red line, and like as we've said with the crossover strategy, this one here is going to close the long position at the close today, or tomorrow morning at the open. It will close that long position unless the market rallies. So into the close in a way that pulls that blue line back above the red line. So this strategy we've shown many times, it has generated good kind of swings on the S&P, and I'm telling you right now that we're going to get a signal. This thing waits until the bar closes. It's daily, so tomorrow it'll close. It'll recognize it as being done at the close today, and it will act on it tomorrow morning. So this is one of the things we've included with you guys. All right, so let's take a look here at, if we go to our blog post and go down to the bottom here, I want to just go in this using the platform. This is an hourly chart that I've been working on for a long time, and I want to share with you guys. And I gotta say, this is one I have found to be pretty good. I've been trying to kind of combine different aspects of things that I found that work. So basically, this does some stuff that I think is actually pretty interesting and powerful. What it essentially does is it uses hourly candles, and it tries to combine aspects of a daily chart onto the hourly chart with some interesting sort of functionality. So what we essentially have here is an hourly chart. This is Riot Blockchain, which is a stock that I've actually traded a fair bit myself. I have no positions in it now. It's a crazy crypto stock. When Bitcoin's going up, it can be a way to kind of momentum trade it in the equity market or day trade it. And like I said, this is something there's no recommendation or anything here, but I want to just point out this was a signal right here as a buy on this one. And essentially the idea was that the 50-hour is above the 100-hour, and that's very similar to like some certain daily, like the 5-day against the 20-day. Those moving averages are going to be similar, not exactly the same. Now we did something else down here. I basically took only the blue line of MACD, which is basically the one that goes. That's the faster one, I think. But I messed around this a lot, and here's what I found. I basically found that you can simulate daily MACD on an hourly chart if you change the time interval. So this has much longer time intervals, and this will look very similar to the MACD in terms of when the crosses occur. So basically, this is going to show you daily MACD roughly on an hourly chart. And normal MACD, if you put an hourly chart with the normal settings of MACD, it's going to give you nothing. If you make it much slower, though, to account for the fact that there's 6.5 hours in the trading day, you can emulate days. And this is pretty interesting because what I've found is when this thing is screaming higher, when you have a nice steady trend to that, and then you get some kind of drop down. How do we identify the drop down? We go to the bottom of the Keltner channel, or we see an oversold on RSI. So this essentially has two aspects to it. First, it has a trend recognition. Is it a bullish or bearish stock? We determine that by the 50-hour being above, and this is all explained down here. The 50-hour is above the 100-hour, or we have the MACD giving a rising setting, with a rising MACD. So we have special indicators here that are going to tell you those things. We have this thing called move average order. It's a moving average order, and it's going to basically, it's set in this case to show the 50 versus the 100. Now you can change that. There's an indicator we've given you guys, and we've used it a lot, but I have this set to 50 and 100. All these settings you should be importing into your chart. Actually, you know what? I just make sure, if you don't know where to get this, if you go to the rundown, the very top, and you go to downloads available here to new zip file, as I said, and this is actually what you'll see when you open that zip file. You'll basically see a single folder, go inside the folder, and then we have a whole bunch of things here. And then this is the new ELD, hourly active indicators. This I call it hourly active chart for active traders. This is something I have found can work for 2 to 3 day kind of momentum trades, like the stocks that are just, these are liquid, highly traded stocks that give signals that you can go in and out of, and often have a lot of options as well, which might be interesting for some people. So for example, what we want to look for is we want to determine a stock is bullish. In this case, it was bullish by the fact that 50 was over the 100 and the MACD was rising. It also went to the bottom of the Keltner channel, which we can see from our Keltner pullback. Now, let me just tell you, I changed Keltner pullback, and I made it so that I've already given you Keltner pullback, but I changed it. So if it has a really high reading, it will give a red signal, meaning it is overbought. So Microsoft, is at the top of its Keltner channel. Therefore, it has a red overbought. If we look at the things that are most green, for example, ExxonMobil is at the bottom of its Keltner channel, minus 76%. That means it's 76% below its Keltner channel. And we take the size of the Keltner channel, and then we say, how far below that are we? So if you're in the middle of the Keltner channel, you have a 0 reading. If you're near the bottom, you have like a 1% reading. So look, like Carvana, for example, this thing has, it's right near, this is a Keltner channel dotted. It's near the bottom of the Keltner channel. So Carvana has like a 9%. Something at the very top of the channel, like Microsoft or Meta, have a 100%. So just so you realize, I'm flipping this over. We're looking for stuff that is, oversold within a bullish context, and vice versa, the other way. So this is something that I've been working with, and I'm now happy to be able to share with you guys. So to be clear, we identify trend by the 50-hour and 100-hour and MACD. Those are our two things that determine bullish or bearish trend. And then we look for an overbought or oversold condition, which is a counter trend move. And we determine that by RSI, which is this. So basically the RSI is this gray line, and we can also sort here. So for example, you'll notice Intel RSI it went to an oversold today. And so those are also coming down there, and Microsoft is near the overbought. It's at 60% RSI. It's higher up that the RSI oscillator. So we're going to use RSI, and we're going to use Keltner pullback to find overbought or oversold conditions. Now, another thing I added here is to show me of new low for week, which is going to show up with these yellow circles. Now, the one other thing I did to this was I set this chart to work with 1 year of calendar history. And then I set this thing here, this white cross, is new high for the chart. Now, if you give it 12 months of history, and you can see here, if you go to data, edit symbol, you can see it's set to 1 year. So if it has a new high for the chart, it will be a 52-week high. So this allows you to see 52-week highs on Microsoft on an hourly chart, which I have to say is actually pretty innovative and powerful. This is the sort of stuff when you learn to kind of, make TradeStation do stuff, you can make it do things like this that are pretty interesting. So that's kind of what I wanted to share with you on this. Now, let me just show you some of the signals that came up on it. Today, it is giving a potential long on JP Morgan. Why? Well, MACD is rising. The 50 hours above the 100-hour. So we have what would be considered a bullish trend. And we have a low for the week. And if you look on the Keltner pullback, it is, pretty far. It's way below. It's under the Keltner channel. It's also interesting if you look on the, on the kind of, this goes back to April. You can actually see it's trying to turn old resistance around 140 into new support. It's kind of interesting. So this is one that popped up today. Like I said, Riot Blockchain was one that had a buy signal on this day here on Friday, because it was low in the Keltner channel, and it also had this rising MACD. Gold, the gold miners, GDX, had a bearish signal recently. Let me see where. All right, overbought right here on RSI, but the 50 was below the 100. So that was right there, a sell signal, and you can see that it would have worked. Advanced Micro Devices has also been giving a kind of, recently it kind of gave this signal here. It was outside the top of the Keltner channel on the 5th, which was yesterday morning, but it also had the 50 below the 100, and MACD had just finished this big kind of drop. Let me just say with MACD, I'll just say that, when MACD is falling like this and you're here, this is not bullish yet. The signal is this, that nice thing. And you know what? Even you can come, in my opinion, my experience, it's still kind of valid through here. It still has that lingering sort of, afterglow, even if it's not, super bullish, it's still very often after you get that really solid run, you'll get one more bump. So when you go down here to this kind of oversold condition, when it was at the bottom of the Keltner channel, you still had the 50 above the 100. It was holding the bottom of the Keltner channel. It was also holding these lows. As you can see right here, you had a low for a week. You had a low there. And so basically, that would have been, kind of a potential buy down there. However, this was a potential, this was a do not touch signal right there, because you were outside the top of the Keltner channel when you had bearish on the 50 and the 100. Another one that is oversold but not looking very, very good is Intel. This MACD is just really rough, and the 50 is 100 under the 100-hour. This stock, if you really look at it, I mean, this was like a multi-month high here. It tried to hold. Actually, the purple candles show the first hour of the week, which is also important. You can see tried to rally to a new multi-month high on a Monday morning, and it got denied. Made a low, lower high, boom. So I mean, Intel here was just popping up as, yes, it pops up as being potentially bullish on the oversold condition, but the MACD cross days and the moving average order are both bearish. Let me just actually tell you, MACD cross days tells you how many days since a MACD crossover occurred. So for example, if you look at Apple here, it has a bearish number, but like I said, this is, giving you the signal. But then if you look at something like, Intel, or, this thing has had a bearish MACD now for over 70 hours, which is, I don't know, since the 21st, it's like a week or two. So this tells you a lot and you got to kind of look and figure it out. But when you see a big number here, usually, an object in motion tends to stay in motion. So that kind of gives you the trend. It also today, NVIDIA is starting to look not so wonderful. One to just kind of mention here, this MACD falling, the 50-hour under the 100-hour. Not to say bearish, but from my sense here, NVIDIA is kind of, giving us a sense that maybe the mojo is fading. Also, Carnival CCL had a bullish signal on June 26th right here, because it was oversold, but you had the 50 above the 100, and you had this recent surge of MACD. So it caused this one little blip. But like I said, when you have that big history, of like multiple days rising, it's not going to necessarily just instantly die. If you also look at Apple, it had several opportunities using this strategy throughout the month of June. If you look here, we had situations where the 50 was above the 100, the MACD was rising. We did not quite hit oversold, but we hit a low for the week, and we went outside the bottom of the Keltner channel. So all those things would have popped up as potential sort of signals for trend following in Apple. Let me just say that this is intended for highly liquid stocks and ETFs. So I just basically uploaded here, or I added a bunch of things that trade a lot of options. And I've shown you how to scan for those at other times. So that's the one to show you guys. This is, I have found to be a pretty interesting, thing. And it uses a lot of technical indicators in a different way. I customize a lot of these indicators. If you're curious, let me just show you. Go to studies, go to edit studies, and you can see the studies that this has on it. First bar of week, it has the Keltner channel dotted there. It has the line at ask and bid. I put that in because in the pre-market, you can see where it's going to open. Line at price, I just put all those on there to help you see where the price action is. MACD, but you can see it has these crazy big values. And remember, this is hourly. And then it has the 50 and the 100 as two moving averages. It has new high for the chart and new low for the week. New high for the chart will tell you 52-week highs. New low for the week will tell you lows on the week. Next earnings date is also good. Also, right there, it tells you when earnings are, and then the RSI is probably one of the few things that I use the standard settings on. So this is something that I've been happy with, and I hope you guys you like it. Okay, so as we kind of dig into our we dig down here, it's interesting. There's been more people kind of upping their forecasts. Tom Lee, at Fundstrat, this lady, Katie Stockton, who I actually, funny, I used to know her back at when I worked at CNBC. I had to put it's Stockton, TON. I'm not sure. Anyway, these are both of them kind of upping their forecast. Now, if we look at the S&P here, let me just jump over to this chart. My perspective is that momentum is likely fading, and we're likely to see something like this. Now, if you look at February, we probably would have had a modest, sort of sideways move, but then we had the bank, crisis, Silicon Valley Bank and all that, which I think pushed it deeper than it needed to go. My sense in this market is pullbacks are shallow, and this is really the kind of price action we get. This sideways movement is a pullback. When you're in a market like this, when people are underinvested and inflation, looks to be potentially lower, and you escape from this sort of sideways movement. So in my sense here, I would tend to think that we could be set for a period of just sideways movement for several weeks. We have these other big items coming up, but I don't have a lot of particularly clear thoughts right now on the index itself. I said we were going to hold 4,400, and the other thing is that we have this level. All right. I continue to watch this level as a potential target to the upside, and then this level. These are from March and April of last year. So my sense has been that we continue higher, but at the same time, with that signal that we saw today of the on the breadth chart, with this signal, it could be telling us that we're setting up for a period of sideways movement. Okay. A few other interesting things popped up here. We go to my MT main workspace. I want to tell you that I did a bearish trade. Well, it wasn't exactly bearish, but it wasn't bullish, to put it that way, on Nike today. This is a company that to me is, in a pretty difficult position here. And I'm kind of looking at this 52-week low down here in the low 80s is a spot where Nike might want to go. The thing is that, and I want to make this point in general, I've said this about retail in general, and a lot of consumer products, is I think that we are in a period now when branded merchandise in general, whether it's Tide detergent or any brand, all these things are, I think, facing trouble. And I would just say the reason is people used to sit and watch traditional television, and they got their typical ads, and it was a certain model. It was somewhat monopolistic. Now it's a lot easier to be competing. And also you have the ability of places like Walmart that are cranking out all these, competing items. And I just say that Nike, even though it's not, like a household goods name, it's essentially a branded marketing business. And I think when you look at the job cuts at a lot of the big media companies, and then you think about a company like Nike, these guys are kind of joined at the hip because Nike is so much based on, sports and ESPN and all these sort of marketing channels. I think that marketing model, which has dominated the 20th century, it increasingly is coming apart. And I think that's one of the things that's really, going to be a problem with Nike, which basically means is that the value of their intellectual property is declining. On top of that, you have them attempting this growth in China. And I've talked about this, but I gotta say, we had a couple of articles here about, China really coming unglued. And we've talked about this. They face a significant, this one says people are trying to get their money out of China. Global commodities rout is fueling a bleak economic future. And then it's all about China. China's rebound loses momentum. So the key point is, and we've talked about this, China has, a problem with its debt. They also have the problem with the fact that they destroyed the equity side of their capital structure when they came out and started cracking down. So first year of bad debt, then you destroy the equity side by telling people that you don't have any right to make money as an investor and as an executive and entrepreneur. You've basically destroyed both sides of your financial system. And I think that, on top of that, you have a bad demographic problem, and you also have, just the fact that there are jobs coming back to the United States. Actually, look, our trade gap as a percentage of GDP is narrowing. So all these things come together as saying that, China faces a lost decade or decades ahead of it. We've been talking about this, and now the news is confirming what we said. It's also interesting. I saw that some news article, I think on Yahoo Finance, they're just now talking about what we were talking about a couple of months ago about investment in American factories. So when I look at the data now, it looks to me like we're setting up for a very steady economic expansion. When we're done with the Fed here, we have all the supply chains are fixed. Look at this article here. General Motors sales stabilize as supply chain stable, as sales increase as supply chain stabilizes. You see this. All right, here we have our S&P Global Manufacturing PMI. You're seeing sharper fall. You're seeing production drop. But then we have input costs, faster decrease in input costs with selling prices, little change, destocking intensify. So basically, what we now have is we have prices have come under control. We have all the supply chain bottlenecks are gone, but we also have low inventory and we've built a ton of factories. As the economy stabilizes, those are going to translate into jobs, hiring, production, GDP, but without inflation. And you're going to have steady income growth. You're going to have steady GDP and production without inflation. That is what the data is pointing toward. And you throw on top of that the situation of rent stabilizing and all that stuff we've talked about. At this point in time, it's looking increasingly positive overall. And, I think there's a lot of gloom out there, but the data points toward a soft landing. The question is just if the Fed is going to be able to accept that. What my sense here is what they're doing is they're basically talking the talk for now, but when we get to the job numbers tomorrow and CPI after that, let's see if they're still talking that talk in July, on July 26th, we could have a dovish hike when basically they hike and it's the last one. And Powell says that, or essentially signals that. Or there's also the Jackson Hole. Paul McCulley, former guy at PIMCO, really, big, economist and bond market guy, has been predicting that the Fed will pivot at Jackson Hole in late August. So let's just kind of see on that. All right. The other couple of others, though, but I want to mention about Nike. They've got a couple of bad things happening. Consumer products, branded merchandise in general is problematic. And on the other side of the equation, you've got a big bet on China that it's hard to see over time how it works well. Now, another company that is bet big on China that also is being hit with an ugly stick is Starbucks. I mean, look at this chart. We've got, a gap down, a failed, this is probably the earnings report. Now look at this. I mean, let's look here at, let's just do a little trend line action. I mean, this just breaking this low. I mean, you got bearish ascending triangle, breaking the 200-day moving average. And then the same thing, there's a lot of space here. So I think this is just another company. If we look here, let's take it out to a weekly chart here of this one, of Starbucks. I mean, lower high on the weekly. I mean, this is just, look at this. This is, I don't know. To me, this is an interesting sort of thing to consider. I want to just kind of point that out. All right. Now, the home builders. These guys are, if we look on our MT main, go to key ETFs, and we look kind of on our, net change year to date, and we look here at our general industries, these semiconductors have been leading. You can also see, though, in the last 2 weeks, they're negative, and the SPY is up. So they're starting to lag. But the home builders have really been another area of strength in the market, and they're also pulling back pretty good here. So from my perspective here, these guys have had a really nice run, and there could be some interesting opportunities here. I think this is one now, though, where we got to look for the bearishness to play out. In this, we're still coming down the Keltner channel. Maybe we'll come down here toward 80. This could be kind of interesting. This 79, 80-ish area, $80, right around there, that Keltner channel. That could be something to be thinking about here. So I think right here, the home builders are in an interesting long-term sort of spot. And I think that we, it's going to take a week or two. But I think they're an area where people are going to remember, and depending on where the Fed takes us with things, this could be just something to definitely this could be something to keep on the radar. Now, another area that's been interesting here are the real estate investment trusts, which have actually been trying to rally off the lows since the quarter began. And I think this is something also we want to kind of keep on our radar, because if interest rates have peaked, then basically we're in a situation where the real estate investment trust could have had some long-term lows in them. So I want to just kind of mention the fact that these guys are actually starting, and we go over here on our MT main key ETFs, we look on a 10-day basis. We actually see here real estate investment trusts are the top performers. A lot of these guys are hotel stocks. So it's kind of interesting to see that. As the quarter begins, even on the 1 week basis, they're also, and this is more or less since the beginning of the quarter. On the other hand, and I've mentioned this, and I think it bears reiteration and attention, is that there's the semiconductors. I think it might have been on 4th of July, but it was in the last few days. The Chinese came out and they basically did this thing with like germanium and these metals that are needed for semiconductors. That's not a wonderful thing to hear about. But the other thing is, like I said, with Chinese economic growth weak and a lot of the other numbers out there not amazing, the semiconductors had a really big run based on the AI thing. But if you look at their orders and some of the other internals, the fundamentals on this industry, it's not great. And I think right now people just kind of need to be aware of that. If you look at the SOX, the Philadelphia Semiconductor Index, it's actually making a lower high here. And if you look at the NASDAQ in comparison, it made, well, it actually made a higher high. But the thing is that when you see those lower highs, this is how this is how the chart starts to tell you, that it could be tired. And in my view, that's kind of what these stocks could be telling us here. We've had a lot of people say that the underlying fundamentals are not that terrific for semiconductors, and we know the link to China. And I think as the bearish story spreads for China, I think we got to be careful of that. This is Micron, which in my view is like a good canary in the coal mine for the industry. Looks pretty ugly. Qualcomm, also not looking terrific. So I was actually looking for some, potential options plays in these, and in my perspective here, something like Qualcomm could be setting up to the downside. We're going to get to a few potential option trades. Let me quickly look to your comments now. Can you repeat the length of time used to collect data for the MT hourly workspace? I opened it up and my Keltner channels moving average are not extending back to the beginning. Thanks. Okay, this should, I would tell you, this actually might take a while to load. These are all stocks that I've looked at a lot. So you might see a little PD up there for pending data. Just go to like Apple, and you should see here, if you go to data, edit symbol, it should say 1 year back. However, it might take some time to load. In fact, it might take a day or two before it all works correctly. I have these, I've had this workspace open now for like, days at a time. So if you can't get it to work that way, you could email me at drussell@tradestation.com and I'll help you. But I think it'll just take time for the data to fully load. Someone is thanking me for sharing a workspace, which glad that was the what was it? I think it was a crossover strategy. All right, thanks for going full screen. Is this webinar recorded? It is, but it's not always posted right away. If you have some questions, let me ask you, sir, the new guy, were you able to get the zip file? You could answer in the Zoom. And by the way, folks, if you are wondering, use the Zoom chat, just talk to everyone if you have any questions. Daniel, as if your first time, were you able to get the zip file? Let me make sure you're able to get that. So anyway, I don't want to just beat up on China, and this is not political or anything. It's just that you have basically a country that grew quickly without good controls on their capital markets and on their allocation of resources. I mean, basically, if you had like a forensic accounting class, or you were like an auditor and you wanted like a case study of how you're going to get financial problems, you basically have China. You had a lot of money and you had not a lot of accountability. It all came really quick, and it was a closed system, and it was under, for better or for worse, a political system that, was, kind of self reinforcing. It wasn't like it was under the scrutiny of global, auditing firms and stuff like that. So, and then on top of that, you have all the development of real estate, um, and and the problem with real estate, it's a long-term asset. So, like, it can take 20, 30 years for a bubble to inflate, but then when it's broken, it's a bad thing. So I want to just point out, I mean, this thing in China, I think, is just now spreading as an awareness. And it looks a lot to me like Latin America in the early 80s. I actually learned economics in the Central Bank of Venezuela, and basically I learned a lot about how things go wrong, when I was a financial reporter in Caracas. And I talked to a lot of people who saw, these were guys, 15 years after the implosion of Venezuela, financially, they were telling me how it happened, because I would like talk to businessmen, economists, and stuff like that. And there are similarities. I mean, that was a petro state, but at the end of the day, when you're an export state, dollars flood in, and the dollars have to go places, and they often go to the wrong places. That's what happened in Japan in the 80s and 90s with Tokyo real estate. Dollars flood in, they overinvest, and it even happened in the United States during World War I, which is how we got a lot of the boom in the stock market and real estate in the 20s. Was basically all the gold in the world came to America, and then it pumped up asset prices, and then there was a crash. So anyway, so if you actually look here at some of the data that's come through, I don't have the headlines right in front of me, but the Purchasing Managing Index report, the Institute for Supply Management, have shown, like I said, the inflation kind of coming under control. And I want to just mention that CPI is expected to hit 3% next week. So that's just something else that is, pretty, it's when you remember, when you take a step back and you say, wait a second, CPI next week could be 3%. It's like, yeah, it's hard to look at these economic numbers today, like ADP, and get too worried. Actually, look at this. Look at CME countdown to the Fed. If you really look at this, today we had, if you guys don't know, we had a hot reading from ADP. We had a huge drop in challenger job, firings for June. The layoffs got cut in half in June. So it was a very strong economic situation. The ISM services was hot. All of these were arguing in favor of a hawkish Fed, which is one of the reasons why the market got hit the way it did. But now if we actually let's look at like November, and the Fed, it's going to be pretty much the same as September. You can see down here that we didn't change a huge amount. I mean, we basically went from a 32 to a 38% chance of another 50 basis. Excuse me. So, I mean, the market sees this, and we take a step back and we say, wait a second, CPI is going to be 3% next week. And then we get earnings. And so the question is, does that market just collapse with earnings season about to come and CPI about to come? I mean, that's, I think, the kind of calculus in play here. The other thing is, if you look at the earnings estimates, even with the incredibly strong Q1 earnings, the full year earnings numbers have not been revised higher, according to FactSet. We're still looking at like 1% earnings growth year over year for the calendar year 23 to 22 versus 22. The question is, if there is no recession, and you bake and you start to include the AI and everything else, I mean, look, I'm not going to predict anything, but you have to just take a step back and you really say, do we really think that those earnings numbers are accurate? Or are the analysts going to wait for numbers to come out this quarter and then dramatically raise the estimates after companies report? And I think that's really the place where we are right now. We have to realize is that it's going to be difficult to, I think, justify earnings estimates where they are now. We could actually see them go higher because they have not been raised, even, they've remained the same. If you look at the fact set year-over-year numbers, they haven't been changed since before the AI thing happened. So I want to just mention that. Let me just see if there's any other points I'm missing in here. Consumer sentiment. It's very interesting to look at the consumer sentiment, consumer confidence. They showed a really interesting, I mean, I've never seen language like this before in the University of Michigan consumer sentiment. I have it right here. This number. And then where was it? Overall, this striking upswing reflects a recovery in attitudes, along with positive is a debt ceiling, but also softening inflation. So, I mean, this is very different than what we saw, a year ago. All right, these are the points we're working through. Let me just go back to this. Okay. All right, so I did some of these different, chart studies I wanted to mention. We do these on TradingView. You want to just follow them. I continue to look at the situation in energy, and we had a big draw today, and honestly, like energy has been a pretty rough spot. Let's actually look at what XLE is actually doing now. It's coming off these levels. Crude oil. I just think, and like I said, the fundamentals now are very positive on energy. The technicals are still not positive, but I think we just have to realize that we're looking at a real kind of shortage here, or not. We're getting near a spot where, this could kind of, turn. If you look at where the inventories are now, and you look at the driving season, and you think of, a cool CPI number in the Fed, and people start thinking the Fed is done. This is a long-term level here with oil holding 70, and the inventories, getting more positive. So I think oil is still on a watch. Energy is we're still watching it for a potential surge. It's not happening yet, but I want to just point out that I think and I'm not saying to just buy something that is, I would never recommend anything, but the point is there's the ingredients for something here to happen. We don't have confirmation yet on the charts, but it's interesting because some of these names, like Exxon and stuff, the options are actually very cheap on a name like Exxon, if you consider where it is. And those are some of the names that when things kind of come to life, these are the names where, I like to think about option strategies in them because they're very liquid, and sometimes you can create some good strategies. Let me see what else I have on my list. We did a thing here on Nike. It's interesting, Salesforce here. I mean, you can just kind of look at these, but we also did a thing here today on Nike, which you might want to, we kind of highlighted those points. But, I was debating between Nike and Starbucks. Starbucks also pretty unbeautiful. All right. So I wanted to actually point this out. Always look for a name that is kind of a lesser known mover. And Trade Desk was actually one that was really moving in an interesting way. And, it has this pullback here, but this was one that was kind of interesting because, it kind of has, if you look back on the chart here, kind of rallied up to some levels from, over a year ago. And this is one of these kind of new growth stocks that all the things, there's nothing wrong with it fundamentally. It was just an overvalued growth stock, and now it's pulled back. It's basically hasn't moved for it hasn't moved in 2.5 years. This is where it was in November of 2020. So I mean, you have a stock like this that has I don't know what the valuation is. It's possible that it's come down because it's probably grown as the stock has moved sideways. So I mean, these are the sort of areas also where I think people looking for long-term momentum trade. Some of these sort of things are kind of interesting in a name like this. I just wanted to point this out. They're not in any big index yet. And I think that's really the thing. This was a stock that a lot of people were talking about this whole way up. I remember people talking about Trade Desk being this like innovative growth stock. And so I wanted to kind of point that one out that popped up on my list. they basically retraced. I've actually noticed another thing that I had on this thing was, and I did this with Salesforce, is that basically a lot of these stocks have gone to, so they peaked in November of 2021, they bottomed around the end of last year, early this year, and then they go to the 50% level and they sit and then they break out. That happened to Meta and it happened to Tesla. So Meta, I actually have a study here. If you actually go to this, then you click through on this. Meta and Tesla both went to their 50% level of the drop. This is on TradingView, but this is the 50%. It went to that level, right? We said this would be the target. It goes there for basically almost a full month before it breaks out. Tesla also, we had kind of identified the fit. It wasn't this was basically the same time frame though. Well, actually, no, it wasn't. This was a shorter time frame, but it still went to the 50% level, pulled back for a while, and then broke to new highs. So anyway, wanted to just kind of show you this 50% has not been the end of the road. It simply has been a stopping point along the move higher. And if you look at trade desk also TTD. Let's do it on the. Let's do this really quickly here. We'll go to our drawing Fibonacci price retracement lines. Go from this high more or less to this low. If I don't have it quite right, but boom, there we are. 50% retracement level. CRM. Fibonacci price retracement lines. Boom. 50%. So these are to me kind of interesting. Monkey see, monkey do with pattern recognition sometimes. So remember, payrolls are tomorrow, CPI next week. Earnings season starts on Thursday, a week from today, with Delta and then Pepsi, and then the big banks start on Friday the 14th. And then I already explained this. So we all love options, or at least you should, or maybe I shouldn't say that, but I love options, and they are an interesting thing because let's take a look at this chart here. I'm going to just put this back to a daily. Let's look at like Apple, and now let's look at a little thing. And this is something that options traders, I think, should at least know about, and also realize that TradeStation gives you some of this data that you're not going to get at other places. Go to studies, implied volatility, or IV, I think it's called on this one. It's called IV, or no, it's implied volatility, all options. When this goes down, it means options are cheaper in relative terms. We've seen across the market, we have seen options get cheaper. And that means for people looking for long upside trades, options can be, an interesting sort of a potential. By the way, Microsoft today, you had, I think Morgan Stanley saying they're going to treat 3 trillion along with Apple. So just interesting, but there's another name that trades a ton of options. Let's just get our Option Station Pro. It's a little airplane. Can you please tell me where to get handouts? Yes, Phil. Go to this article here. So basically just go to TradeStation.com, right? Oh, it looks like, thank you, Jim, for sharing that with him. All right, let me just make sure. Let's look at your questions. You have a question about these crosshairs, and they added this recently. I don't know that much functionality about it. If you want to email me your question at drussell@tradestation.com, I will try to get you an answer for it. All right, so a few potential things that popped up on my list here for options. And I think, first of all, like I had mentioned, to me, in this chart here, JP Morgan, If we look over here, this is the hourly, but this has JP Morgan. So basically, it has earnings on the 14th. So I was kind of looking for JP Morgan. From my view, let's not look at a daily chart. If we look at something like JP Morgan here, let's look at something like the this is just this looks like an opportunity, for people considering continuation sort of trade. Down here was a pullback, held the 50-day moving average. It'd be interesting to actually do a quick little Fibonacci retracement on this one, drawing price Fibonacci. Sorry. It's also a 50% retracement. So, let's see what would happen if people, all right, so we're looking at the 14th. So we can look at earnings basically for that week of July 19th. Wait, this is the wrong thing. Let's change this to, you can change it to match. I'm using the blue global. I think it's this one. Let's see now. Should join up if I go to my Option Station Pro. Nope. Anyway. So my perspective, I just look at this, to me, when you look at something like this, something like the 145 to 150 of that earnings week, the 14th of July, Friday of next week, from my perspective, 145 to 150 calls. Call spread, that's like essentially about $1. So, this has been a name that has been, pretty interesting. And I wanted to outline that one. And Wells Fargo also reports. Let's see, when do they report? I think they report at the same time. Wells Fargo reports on the 14th. And sorry. There's another name where you have an interesting sort of level. And from my perspective, something like, a move to like 47 from 44 to 47 is not, crazy talk in a name like this. So, you have a stock that is now at around, if we go to the 44, in fact, are we looking at the right week? Wow. Look at these are cheap. My God. 43. Look at these 44 calls at 37 cents. Some of these to me are just, this is to me like, for maybe like spreads don't even make as much sense in something like this. Anyway, and then there's also the potential for some put spreads. You look at Nike. Nike, we were looking at a level down around, and now they already reported, but if you look at a name like Nike, it had a level down to the low 80s. So something like, if it breaks, this level here, this intermediate, there's a lot of space on there. So I wanted to just kind of point that out as a potential thing. And you look at a name like this, that there's that potential for that kind of the 95-90 put spread and something like September. It's already in a bad quarter, and it's well, actually, the quarter just started, but there's a name where to me, it's like it reports late in earnings season, and it just seems like they have a very bad macro direction happening. Also, a name like Starbucks, here it is breaking a level. Let's just look here at the options for Starbucks in like August. If you look to the downside, like the standard monthlies, a put spread on that, is about $1.50. So when you look at this also, my perspective, a lot of trend followers would view that as a kind of tricky one. The other thing is, this is also with volatility low, as it moves lower, the puts can move in your favor, especially if you do a single put. So anyway, I want to kind of show some of these things, because from my perspective here, we're in an environment where implied volatility has come down, and owning puts and owning options can start to make more sense than when the VIX was in the 20s. All right, let me see if there's anyone else here who All right, someone has a problem with their TradeStation build. Email me if you have trouble and let me see what I can do to help you. Those are the main points I wanted to cover. As usual, the one other thing I'll mention about semiconductors is if you just look here at the SMH, and this is one of the things that people have been aware of, is that the semiconductors are now in a spot where you could argue that they're overbought against the S&P. That's what this ratio shows. So that's just kind of interesting. Let's look though at the real estate stocks. I'm just interested in those. I mean, these guys have gotten just demolished relative to the overall market. So it's not a glamorous sector, but it is interesting what I'm seeing with it. And when you look at this, if people believe that the interest rate situation is nearing a peak, those are most of the things I wanted to pop up today. The one last thing I actually noticed was you have a few stocks like Boeing had popped up for me that is sitting right at its 50-day moving average. The earnings are coming up. This is an interesting candle yesterday on Boeing. And I'm just looking at this price action because we basically have weights holding right here. The 50-day moving average is right. It's just right in this range. And I don't know. It looks to me kind of interesting. Like we've seen other industrials. Look what Honeywell did. It basically had this tight range and then it expanded. Eaton kind of did the same thing. It had this, a lot of these industrials are doing this. They have this like tight range and then they crank. I think Ingersoll Rand did the same thing. We've seen this pattern in the industrial space. So I think Boeing right here, this was interesting. So the way I just showed you that, last thing I'm going to show you, MT Main, you have your MA tools, and you can then see stocks that, for example, are testing the 50-day moving average today, touching the 21-day exponential. So you can actually see here, that's how I found Boeing. I'm not sure. You can see stocks that are holding the rising 50-day. And I guess for Boeing, well, you know what? It's actually right above it. But if you look at some of these other names, they were at the 50-day. Actually, VeriSign, and another one. All right, so VeriSign was popping up to me. It looked kind of interesting. This is, I mean, their earnings, their last earnings were good. And the other thing is McDonald's. Just kind of quietly fighting higher. It's kind of interesting. I think McDonald's and Walmart have emerged as these two kinds of like painfully boring stocks that are performing well in this macro environment. The other thing I just want to mention is they both trade a lot of options. So for people looking to kind of position for upside, these are also stocks that might work for those people looking for options. So great to talk to you guys as always. I will see you next week. Don't forget we have payrolls tomorrow and then CPI. Which day next week? Look over here. We always put it in our rundown. You go to research, you go to insights. It's on Wednesday of next week, the CPI. I have just found it to be kind of useful, and maybe you will as well. It kind of splits apart the trend from the opportunity, and that's kind of makes things easier to get your head around. I hope everyone has a great day. We'll see you next week.